Let's kick off with the trade talks and what we've heard overnight, some concerns that we've been reporting on from the US side that China is pushing back. Does that change your thesis at all about how this trade conversation continues?
Has not changed. I think I'm pretty optimistic. I think both are very eager to strike a deal. It's just probably reach a final stage, and of course, maybe some hard bargaining will happen, but I think quite clearly both sides wish to have a deal that can be, of course, satisfactory to both sides.
Okay, if you don't mind, let's put the optimism to one side, and let's play out a scenario where maybe a deal falls apart, because of course we saw what President Trump did in Vietnam. Do Chinese policymakers have enough tools at their disposal to ensure that the economy can weather that potential storm, even if it is an unlikely scenario in this case, in your view?
Sure, of course. For China especially, there is certainly a plan if something, this important deal cannot work out. For example, the massive, tax cut has already been announced. Probably they will do more, more monetary easing and probably support to domestic exporters. This kind of policy. Also, likely, the currency, right? If there is really a huge tariff on Chinese exports, the economy will be hurt, and then they could think about even depreciation of the currency. So, a lot of continuing plan, I believe, is already on planning. But of course, because the grave consequences of this escalation of trade war to the Chinese economy, I think that certainly is not the ideal solution.
Dr. Shen, it's Yvonne in Hong Kong. We were just focusing on some of the earnings that we've seen of the U.S. FedEx in particular, a big bellwether on where the global economy is going. They had to cut their profit forecast again, given just the global growth picture at the moment. Do you think any kind of trade deal can reverse that trend, or is there actually something more ominous now externally?
Yeah, I think for China, this year is very, very important. We know last year, each quarter the GDP growth actually was declining. But this year, the Chinese government hoped to achieve a revival of the growth. And the external demand certainly is one very important part of that. But domestically, Chinese government already announced, massive tax cut and also monetary easing. So I think the current trend look in China pretty good actually. Very likely the Chinese economy can achieve a low start in the first half and then a recovery in the second half. That's very different from the global economy situation where we are seeing deceleration in US, Europe, and even Japan. So I think that for the Chinese government, it's very important to actually maintain this momentum, so to achieve a recovery in the economy. So maybe I think all this bad data is actually results is coming from the last year's tightening policy. But this year for Chinese side, I think they hope to see a recovery.